The Reserve Bank of India on Wednesday announced that it will not allow a proposed merger between Lakshmi Vilas Bank and Indiabulls Housing Finance as well as its commercial credit lending unit. According to a statement by Lakshmi Vilas Bank to the stock exchanges, the Reserve Bank of India has sent out a letter on Wednesday rejecting their proposal for the merger. Now remember that the merger was originally announced in April, where Indiabulls Housing Finance had proposed to take over Lakshmi Vilas Bank's businesses and thereby set its own management in the bank. Later on, a month later, it reversed that scheme of amalgamation and said that Indiabulls Housing Finance as well as Indiabulls Commercial Credit will be merged with the bank, and thereby that proposal will go forward. All companies had approached various regulators, including the Reserve Bank of India, for approvals for this merger to go ahead. After a wait of nearly 6 months, now the regulator is finally saying that it will not let this merger go forward. Now remember that there were already questions being raised whether the regulator will consider this proposal at all, considering that Indiabulls Housing Finance has a large real estate business under its wing, which the promoters of Indiabulls had proposed that they will hive off that real estate unit and thereby make it easier for the regulator to give its approval. Clearly that has not worked in Indiabulls' favor, with the merger being called off. According to a statement that was given to BloombergQuint by Ajit Mittal, the group executive director at Indiabulls Group, he said that this is going to be some kind of a closure for Indiabulls Group, because it will stop putting all its energies and effort behind this merger and thereby focus on more long-term business needs that are necessary for Indiabulls Housing Finance's core business, which is lending to buy homes to customers in the market. The company as well has gone through a considerable liquidity constraint since the IL&FS crisis happened last year. The merger with Lakshmi Vilas Bank was looked at as a way to get past some of these issues, liabilities issues with deposits of the bank coming into Indiabulls' control. Similarly, for Lakshmi Vilas Bank, it has been facing considerable capital-related issues, because of which the Reserve Bank of India has put the bank under the prompt corrective action framework. They again believe that this merger could lead to some kind of capital infusion, which could help the bank come back into stronger footing. Now that the merger has been called off, it remains to be seen what exactly Lakshmi Vilas Bank will do to get out of the PCA framework and thereby become a more functional bank.